Welcome. Thank you for joining us. Got a lot to cover today with the transition and the merger, so I'm going to let Dave touch on that, and then I have a few bullet points for you as well. But before we get started, as always, raise your hand. We can unmute. You can ask questions. The chat feature works extremely well, and we'll answer questions normally towards the end, just because when we get going, we hate to pause right in the middle, but we will get to them as quickly as we can. But I know, Dave, you wanted to touch a bit on the merger, and then I have a few things to fill in as well.
Yeah, I just wanted basically to say a couple of things regarding that. It's really just I want to be clear on this, that this is not like they just have waited for 3 years now and are just like, I hope this works, pushing the button. They've been practicing this over and over and over again. I feel 99.99% sure that what's going to happen over the weekend is 100% of the assets will get moved appropriately, totally. They're not going to go off into space and not be lost. And by the way, it's 100% that not on you to worry about that, okay? It's not, if you can't see it, doesn't mean it's not there, is number one. I really wanted to hit on that. The second thing I wanted to mention is that I'm sure there will be some problems for people that had an old Schwab account years ago, because your Social Security number, you can't ever get rid of it. It's going to be tied in. It may cause you a problem. And also, family accounts are not householded until we get over there. They don't automatically, that householding thing feature does not come together. So it doesn't mean that your spouse's IRA disappeared. It's going to be under your spouse's name, just not householded with yours until you get it moved over there. So those kinds of little things may be a little different. I'm also 100% sure of this. You're not going to like it, because nobody likes change. I know, I don't like it. And believe me, we have done a lot of work here that really kind of irritates me. We didn't choose this, but it is what it is. And I think in the long run, it's going to actually be better for our clients. There really are some new features that you'll see that, and we are certainly having new products that have lower fees that are now available before. And the same things that we enjoyed before seem to be coming over and are being merged into Schwab. So maybe we really are going to get the best of both worlds. We'll see. It will not, you won't like it because the optics are going to be different. You don't like the new statement. I know. I already know you don't like it because it's different. It'll have a different color. It'll just be the way it is. But they all are the same. They really are. And so we'll just let this thing flow through. It'll be okay. And most importantly, Jennifer will cover this real quickly. Nothing changes with our relationship. TD didn't manage your money or help you with your tax planning and things like that. We did. That's the same thing going forward. Schwab doesn't manage your money. They're just the custodian. They hold it. They don't do anything with it. We make those choices within the parameters of what we're trying to do to accomplish your goals. Okay? So with that, I just feel like it's just going to be fine, except for those few optical things that people will think accounts might be gone. Jennifer, why don't you add a few things?
All right, I'm going to pull up just a bullet point because there's some dates on here that everyone wants to see. And we already had a question of why are we changing? To reiterate what Dave said, this wasn't us. We didn't make the change. We liked TD. We were expecting to stay with them forever, but they were purchased by Schwab in 2020. They've been working since then to get all the systems to talk to try to make this as seamless as possible. We do understand that they've merged accounts and moved them on the retail side, and it went just fine. So we're assuming that will happen also on our side. But again, the relationship with us doesn't change. TD Schwab just hold money. They don't do anything else for you. You still call us if you have questions that come up during this merger at any time. You just call us. We'll help. So nothing needs to be done on your end to complete the transfer, but you will have to go back in and log in. One of the things that has been a lot of questions were, where are my accounts? Why can't I see? As Dave said, householding doesn't happen right now. Everything is by Social Security number. So if your joint account is under your husband or your wife or however it was open, that's where it's going to show up. Okay. But also after that, everything will be merged together. If you need to get it and it doesn't work, you call us, we help. We're still here for all this. If you're not on your own, I really think it's going to be very seamless. Like I've told everybody before, if you've had a great relationship with TD and you think they're wonderful, it's because you don't really work with TD. You get to call us and we help. So we hope you think we're wonderful. So you're going to think Schwab's wonderful. Okay. Blue Leaf, that's where everybody logs in to see performance. It's that great consolidated report. They've also been working hard with Schwab to keep all the data so we don't have to start over again. Those of you that were with us before we moved to TD knows that we did lose some data. That hopefully will not happen now. We've been very good about downloading and keeping information. But remember, as of this Friday, September 1st, you will not see your accounts until after Labor Day. So don't get worried if you try to log in and they say you can't. It's just not going to be available. So please just wait and don't worry until next week. And then you can worry all you want, but we don't think you're going to need to, okay? Let me see, what else do we have on here? Schwab Alliance is where you'll log in. I do understand that if you've bookmarked TD Ameritrade and you click, it will bring you to that new website. So you'll be good. And then you just bookmark the new site. What else? I think that's pretty much everything. So please don't hesitate to let us know. Don't be worried. It will not be as painful as you're anticipating. New color statements, new account numbers, your income will still show up. They've promised that. Those of you that have checkbooks, you probably already received your new Schwab checkbook. Please use those and get rid of your TD checkbooks. I think that's it. Can you think of anything else, Dave?
Nope, I don't. I think that's it. Just relax when you try to look. It's not there, and it won't be. And it won't be, but it will be there on Tuesday. So,
Good.
yeah, that's just want to reiterate. Please don't worry because it's gone over the weekend. It is going to be gone. So
right. And
yeah.
we did get one more question. You should have gotten packets for every single account that you own in the mail. So if you got a pile of paperwork from Schwab, that includes your new account number and your new information, because we just got a chat that said they didn't get that information. You should have gotten it by now. If not, Linda, call us, okay? And we'll see what's going on, because you should definitely have gotten it in the mail by now, okay?
Okay.
Good. All right.
Well, great. Well, once again, everybody, thank you for joining us. And I think that I want to kind of, first of all, say I just thought it was time to talk again. I really do. It's been a while to discuss and reiterate. We're in the doldrums of summer, and the market is starting to have some little corrections, except now we have a big rally today. And who knows where that carries us. Crazy stuff like NVIDIA going up and up and up and up. And also what things I'm hearing out there, people worrying about. And I think some of them are we just worry. I totally understand. We worry about things, but I thought, well, let's talk about the things that we're worried about. And then I'm going to quickly not worried about, excuse me, and really swing into, again, just a couple of reminders of why we're not trying to have market predictions, why we don't predict the market. It's not something you can predict, but let me circle back to that after we talk about this. There's really three things that come to mind for me, and two of them are kind of sort of related, and one is the new global. I heard about this one this morning when I was on with Kevin Miller on the radio. And again, the questions keep coming, kind of like, well, what are we going to do when the Soviet Union and China and the Saudis and Brazil all get together and create a new global currency? And what do you mean? What are we going to do? We're not going to do anything. Who in the world is going to use, like the evil people of the world's currency? Yeah, we're going to switch from the US dollar over to the criminals. This makes no sense to me. It isn't going to happen. We're not in the least bit worried about it. And I'm not sure, I'm not trying to be insulting. I just don't know how to try to convince people who are just really worried about that and or digital currency, because the world is already digital. The vast majority of all transactions, when's the last time you bought anything for cash, really? I mean, you can't even you can't get on an airplane. You can't, pay for an airline ticket. You can't pay for a hotel room without a credit card. You can't make a reservation, go on a cruise. We all know this. We shop on Amazon, we don't mail them dollar bills. We never do. That's digital. That's what we're talking about. And the idea that Nancy Pelosi and whoever else is going to just like walk in someday and take it away reminds me a lot of the 401k worries and concerns of a couple years ago. And granted, I totally get that there are factions of this government that really don't want you to have say in your life. They really want to take over, but that's not the majority of Congress, and it isn't happening, and it's not because of digital currency at all. And so look for a digital currency coming. It is. I don't have any question about it, but we already are, right? This kind of cracks me up, but it absolutely happened this weekend. We went by a lemonade stand. True story. And my wife says, I don't have any cash. And she goes, that's okay. I have Venmo. So the little girl wanted to Venmo a couple bucks for the lemonade stand. I thought it was absolutely, yeah, we are digital is my whole point. Okay. All right. Now, the other one was credit cards. Credit cards are now hitting $1 trillion. Even the Wall Street Journal had that today. $1 trillion in credit card spending. And so there's all this debt. Be careful in different things you're looking at that show like a screenshot of some kind of a hockey stick type of thing of debt. The other one that will often come up is going to be auto loans. How many are in default? The difference with auto loans is they will loan people money that are not going to, that can't afford it, aren't going to pay for it. Why? Because they're going to show up in the middle of the night and take their car back. Okay? That's not like a lot of other things out here. There's no bankruptcy procedures. You just go get them. I mean, yes, you have to have proof of ownership, but you can go get it. And they do. And so this is an ongoing thing, but oftentimes you'll see it clip because, statistics lie and liars use statistics. And that's how they go about scaring people. But I'm certainly not worried about $1 trillion of credit cards. I've always worried about consumers, individuals' spending habits. People are terrible with money. They just plain old are. And now we have helicopters worth of money thrown at people during the pandemic. So they can't run out. Their credit card bills are okay. And now all of a sudden, they can't afford to go spend $100 at the bowling alley. They can't afford dinners, clothes, because there is no more helicopter money. But they haven't cut back yet. I don't know what the survey was. I don't want to try to quote it, but according to the, if you will, the analysts of where this credit card debt has been mostly piling up from, it is coming from travel and clothing. That's the vast majority of this expense. Those are not necessary things. So this is not an economy at this point. There are certainly pain points for families. This inflation is real. And the idea that JoJo's done a phenomenal job is a joke. We all know it. And the inflation was caused by pumping all this money into the system. It's not going to go away anytime soon. It causes pain points, but it is not what's causing debt. And that's an important point in that these folks are just going to have to slow down, but they are able to and still pay their bills by and large. Okay. So those are things we're not really worried about. I only answer that to say this. We don't worry about little economic data. Of course, I have to know what's going on, and I'm not saying I don't pay some attention to this, but the idea that Wall Street analysts have any idea of what the future returns are going to be on the market is, I don't know how I could possibly dispel it more than we have by just our discussions in the past. And they just are not right most of the time. In fact, 51% of the time, Wall Street predictions about the market are wrong. Now, blind monkeys throwing darts are right 50%, coin flips, however you want to think of it. But these people are paid millions of dollars to sound really smart. And do you know what happens every single moment of every single day on CNBC? You know what they ask? Hey, Joe, with Goldman Sachs. Hey, Bob, with JP Morgan. What's your market outlook? What's your market outlook? What do you think about this sector? What's your prediction for the future? Go ahead and tell us, even though we know you probably won't be right. It's literally crazy. It makes no sense, but this is what they do literally with every person that comes on to make a prediction. I think it's just brilliant, and I think about it a lot, and I can't help it because my own brain is all like, I think this, I think that about, whatever it is. And we try to predict the future. But what I really liked was in a recent, and he said it many times in different ways, but Warren Buffett said this at a recent, his recent Omaha deal. Yeah, when he was asked what the market outlook was, he said, "We have never had a market outlook. We don't have one now, and we never will." And it just, I don't know why, but sometimes these things take a while, or you have to hear them in different ways. I was just absolutely blown away. It just was such a big deal to stop and think that the greatest investor of my lifetime intentionally stays away from the babble of what is your market outlook. Now think about what we do often during the day. We get information, we get data, and most of the time, unfortunately, it's politically motivated data, is it not? Is talk radio fully balanced? No, it's not. And I'm not apologetic. I'm an unapologetic conservative, okay? I think the world knows that. But when we get into some of these folks that are just really dancing on the far right of the needle here, all they're doing is talking about doom and gloom and selling gold and all these other nonsensical things. And we think we're getting information, if you will. We're adding to our base of knowledge when in fact, it's not true. We're not doing that. We're making it less likely that other inputs could come in. It's what we do as human beings. I totally understand, but it is a fight for all of us. And I mention it because I hope you do too. I hope you fight against that, okay? Because the only predictions that I ever make about the market is that the future will be full of absolutely certain to occur over and over again, all the days of our life, market corrections on the way to new all-time highs. Both of those statements have been true 100% of the time in the past. I'll take that bet every single day. Every single day. And that's what we think about in portfolios. And when we think about what does it matter next year if the market is up or down? Over the past 16 or so years, when the iPhone was invented, Apple is up 40-fold. That's a little bit of rounding down, actually, but 40 times a $10,000 investment is $400,000. You don't have to be right very often. But when you see something like that product on a company that's already existed for a long, long time, and it's now in the hands of consumers, no more approvals needed. It's there. How many times since then would a market prediction, correct or not, that the market was going to go down and did, have caused you to say, maybe I better sell? Then you don't have a 40x gain. You made a little bit of money and you're out of the home runs. You're out of your Google, your Amazon that goes to the moon after nearly being out of business after tech stocks crashed. Unbelievable. How many times we don't stop to think how many predictions people have about what the market's going to do. This year is so classic. So classic. Last year was a tough year, especially on tech stocks. Interest rates rose a lot, so they can't possibly go up, except that after they spend the first half of the year going up 40+%, some of them like Tesla, Nvidia, more than doubling. More than doubling. Can't do it. That's what all the experts said. Good thing we didn't watch any CNBC to get their certainty of outlook of what would work and what won't work. Not just to make fun of them, but think about this exercise every single year. And then what happened in June? They capitulated. We were wrong, and they became bullish at precisely the moment that the market decided to have a little bit of a correction, particularly in tech stocks. Okay, once again, not to make fun of them, but why do we listen to them? Huh? It doesn't help. And so when people are thinking about what do we like, there are things every day. The market is not monolithic at all. We think we like real estate a lot. Why? Probably because everybody doesn't like it, right? And it gets all thrown into the same bucket. What are we going to do with all the see-through office buildings in San Francisco and other big cities? And the answer is, you don't have to own those companies. We don't have to guess where the bottom is in that. But if you're painting it a brush on a company like Prologis, which can't build enough facilities, raising rents by 15% a year, I'm not joking, they're the experts, and they've got over $1 billion of real estate located in the best places. What does that have to do with an office building in San Francisco? You're right, nothing. What does Exxon or Chevron or the energy sector that's minting money, because yeah, oil prices are down from the peak, but it's still $80 a barrel. They're minting money. What does that have to do with a setback in tech? We think of it monolithically, and we don't have to. If a portfolio is supposed to be income for life, that's what you're trying to accomplish. Not no price movement, not, oh my gosh, what's the market going to do a year from now? Do I have cost of living adjusted income that I can't outlive no matter how long I live? Yes or no? Isn't that really the only objective? So having a market outlook, I think, is not only not helpful, I think it's really, really a negative to making our plans and living through those plans. It's a real detriment to that. Because if I'm thinking, I like this particular sector of real estate, especially preferred stocks on publicly traded REITs, blah, 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 right? You don't care about any of that. That's a spot we like. We think it's mispriced. What does that have to do with my outlook for the market? Absolutely nothing. And this is the way you have to try to break it apart and not allow your brain to have a market outlook. Because the truth of the market is, it's really high. It's really high relative to earnings and relative to interest rates. It's not supposed to be here, except that most of the time, it's way higher or way lower than its average. In other words, it's always here or the complete opposite. It's not where it's supposed to be, like almost ever. It just doesn't do that. And so we have to just accept coming into the year. We don't know what the market's going to do this year. I don't care what the babbling baboons on Wall Street think. I've learned to do that. And so not knowing that allows us to continue to go, oh, well, let's go ahead and just own the greatest corporations in the world. I mean, okay, let's see. I don't see any reason why we should sell Amazon and Apple and stuff like that. And for those people drawing income, why don't we really like these prices on these dividend payers that haven't really gone anywhere, maybe even down a little bit? That means we get an increase in our income for the same investment. That's not a market outlook. That's just seeing what the conditions are in front of us and reacting to them. Now, further, I want to say this. I've said this many, many times, but for those of you who are more conservative, meaning I really prefer growth in income or are literally drawing income in retirement, you've noticed a material change in your portfolios over the last 6 months. Material meaning maybe we've added 10% bond position. We've added some preferred stocks. In other words, not really stocks. Because for the first time in 15 years, we can own bonds. We can, and we are. It's not a statement that we don't like the market. It's a statement of what is your objective. And if we can take some of the volatility out and or increase income, that is what we're going to be doing. It doesn't mean we sell everything and go here. Nothing makes sense to do that. Why make an all or none call? It doesn't make any sense. And sometimes just so you know, when things work really good, like say Apple has, we'll trim your position a little bit once in a while. Again, not a statement. It's just that we don't want you to own 10% of your portfolio in one company type of thing, right? Okay. So those are the kinds of things that we think about. And I want to put that in a couple of charts to really, if you will, to kind of be looking forward a little bit instead of just, how are we going to get through fill in the blank? But before we do, Jen, I want to mention this first. I think it's really, really important as we're, again, understanding and trying to predict the future that it isn't predictable. But some of the trends that are in place, they're not going away. They're accelerating. And so as we look at some of these things, we need to understand they're going to be more quickly or are already here than you think they are, than you want to be. And also, if you think the world is upside down, I do too, that right is wrong, wrong is right. We just we just have lost any sense of reasonableness in discussion, anything. The world is terrible. I agree. And that's a social problem. It is a social construct problem. Where do we go from here? How are we going to fix education? All of those things have nothing to do with AI, productivity, and all these other things we're going to be talking about that are going to make corporations more productive. Technology does that. I'm talking about the economics. I'm not whistling past the graveyard of our society that says the best two guys we have, as every other nation in the world will look in and go, you got 340 million people here, and these are the two you came up with, is JoJo and the Donald. That's what you got. And that's our political world. No wonder it's so divided. I don't believe it'll stay that way, but it has nothing to do with how many iPhones Apple will sell this quarter. And that's incredibly important, or how quickly we're curing cancer and so many other diseases. And corporations, our job is to be saying, what is the trend that we know is coming? How do we get in front of that? That's our job. And my job also is to remind you, as you worry about this crazy world, that those are two separate things. It should have nothing to do with how you manage your money, is how crazy the lunatics in Washington, D.C. are. Okay? All right. So let's look at some positive things that are happening out there. Okay? Now, I'm only going to touch on a couple. You can certainly screenshot that if you want and look at it later, and you can not like it or whatever and add your own. There's probably 10 more. But these are clearly some things that are happening or have already happened and are simply accelerating. I'm going to lump the first two together because healthcare is in a renaissance. And I'm going to go so far as saying that is going to be fixed. This rising cost of healthcare, the idea that we're going to have everything stay the same in healthcare, where it costs a bloody fortune for diagnostics and things like that, I just don't believe that's true. It's not because I don't want to believe it. It's because of some of the innovations that are going on in healthcare, whether it's telemedicine, right? Whether what's going on in the rural communities is phenomenal. You've got basically a connection directly to, say, St. Luke's or St. Al's and experts that can't possibly be there. Yes, this patient needs to be life flighted in. Boom, they're on it. So healthcare everywhere, and that's just like the most minor of things. But what's going on with genetics and everything else is so amazing. It's so amazing. And when you think about the shrinking of a chip and it doubles its speed, and things move slowly and then they move at lightning speed. That's exponential, right? That's what's going on in healthcare. And a cure for cancer just appears to be right around the corner. It really, truly does. I know some people don't like this, but cash is going to become a distant memory. And semiconductors and everything everywhere really is number 5, which is wearable technology. That means also that you may get paramedics show up on your doorstep or a phone call that says you need to sit down because you're about to have a heart attack before it happens, just with what you're wearing. I already know, we already see it with the iWatches. They already know when, let's just say, grandma fell. I told that story one time, and the guy said, yeah, well, that was last year. And that happened at my house. We had a key, and the paramedics let themselves in. My mom woke up to the paramedics, waking her up. She had passed out. iWatch notified them, and there you have it. I don't care much about technology. It's not a life-changing thing, but autonomous vehicles will be, because the roads will be safer. And send your kids anywhere, and you're not going to be worried about your teenager driving around and killing themselves. And finally, number 10, this is the thing we often forget. Innovative companies will make the world better. The world is better than it's ever been. I know we all pine for when we were younger, smarter, more handsome, and faster witted. But the reality is, all the stuff we have is an amazing blessing. It really is. And we're going to live longer, healthier lives because of it. And these companies are the ones running at it. I'm only going to give you one quick example here, and we'll get on to the next slide. I'm just astounded that the number one rocket company in the world is a company that a billionaire decided to, hey, you know what? I think I want to go to Mars. Has the money to do it. But in the meantime, I think I'm going to go ahead and deliver high-speed internet to the world, on a little box for remote locations. I've been on it. It's fast. Starlink, all over the place. Guess who can launch more rockets at a time than anybody else, including NASA? Right. SpaceX. Yeah, how many billions can one person have? I hope more. Because these guys are all creating unbelievable dreams of a better life for billions of people. They are. Governments sit around and talk about stuff. Business people make it happen. And that is just super cool, what's going on. I just think it's amazing. And, and there's going to be much, much, much more that comes from the technology from all of this. And AI, yes, of course, we could end up with a Terminator, probably will. But in the meantime, oh boy, is it going to be more productive. And I got to believe that's part of what this market is doing, is looking forward to the higher productivity that AI is creating in a very fast way. Our bios were on our website were partly written by AI in an experiment by Jennifer. We rewrote parts of it. But that's so today. Imagine where AI will be in just a couple of years. And all we did was write a bio. I mean, it's crazy. It's great. Took a picture of the old bio, rewrote it. It was much better, much better. All right, let's check the next slide, because I want a good reminder here of why we don't want market predictions. We would have been out this year. You know you would have. Wall Street told you to be out, right? Okay, and you don't have to be. And if you miss barely any days at all over the last 20 years, 10, you have less than half the amount of money of staying in the whole time. Seriously, that's crazy. Isn't that crazy? And if you miss like 30 days out of 20 years, you have less than 1% return. Don't do it. Don't go to the dark side. And those of you who say, yeah, well, what if you miss the best 10? I know you've seen this slide before, but you have to understand that the worst days and the best days are almost all right together. And you can't go, I'll get out, I'll get in, I'll get out, I'll get in. You've got to be kidding me. You're not going to do that. So 7 of the 10 best days occurred within 2 weeks of the 10 worst days. That's when they happen. Right in the soup of the ugliness. Why didn't we sidestep this? Because that's what I want. I want the 10% per year returns that the market delivers over time. That's what we want. You may say, well, I'm not getting 10. Well, that's because you're not the market. Maybe you have an income objective. Maybe it's growth in income. Maybe you want to take less risk than the overall market. There's a lot of different reasons why. And that doesn't show the NASDAQ, which is pure growth, very volatile, and a much higher rate of return, by the way. Okay? We can't be out of the market. Just can't. Let's try the next slide. I'm getting too old. I don't have time to come back. We hear that a lot. Okay? Here's the length of bull markets on the left and the length of the bear markets on the right. But I want to reiterate something, not just that, well, what if it took 20 months to come back? I'm not trying to grow a great deal of wealth. I understand. And probably your portfolio is not set up to do that. It's set up to grow a little bit and produce some income. It's not trying to produce home run results. But the reality is, we don't know when we're going to die. And what objective do you have? Not keeping up with inflation? Is that your objective within some time frame of your life? markets always work. And so once you're used to it, I found a Wall Street Journal article recently, pathetic, in talking about senior citizens that were taking high risks in the market. They were owning a lot of stocks. And, you know, we were all taught you should be, as you get older, you need to own less stocks. Well, okay. Maybe what happened, though, is that the older people lived a life of noticing that the market was the best return vehicle on the planet. Nothing was even close. And so maybe they actually learned from their experience that why wouldn't I have all of it or most of it in the thing that works the very best? Maybe I should. Maybe I don't want to own a bunch of bonds that over my lifetime haven't kept up with inflation. I'm thinking maybe people are smarter and don't see risk as the chance that their portfolio goes from whatever number you want, 1 million to 900,000 if it's producing income. So what if it goes to 1.1? What is that time for a celebration? No, it's just you're just owning the great corporations, and over a long period of time, the markets go up 10%. End of story. That's it. It's the easiest thing on the planet. Okay. So with that, we aren't really all that worried about stuff because that's not our job. Our job is not to worry about stuff. Our job is to take that worry off your back. That's all our job is, to bring peace to your life. That's it. Not to find the best investments in the world. Just bring peace. Align your own objectives, your portfolio with those objectives, and roll down the road. And quit trying to own. What's the market going to do? I'm a little bit worried about this. Fill in the blank. What about this? Are you worried about global currencies? No. It doesn't mean we put our head in the sand. But what I want to do is I want to focus on what I can do something about, what I can control, which is to understand what markets are giving us at various times. I don't need to try to predict the future and just prove how wrong I am like everyone else. There's no point. But to react to what markets give us. And when they give you great corporations or bad decisions, you know, that's the other thing. I know if you own some individual stocks with us, I know the optics are hard. They're hard on us because I know. Why do I own that ticker symbol? Why do I own that company over there? Why don't we just own all Apple? Okay, I get it. Because Apple is the kind of home run you don't have a lot of in your entire investment life. It's most of the time, it just isn't that good. It isn't. And we just got to get over it. And some of you totally understand that. Others, if you just really don't, it bothers you. Well, you know, we hide those bad decisions inside of mutual funds and exchange traded funds because there's nobody, like Warren Buffett said, 10 investment decisions over his entire 70-year career accounted for most, if not all, of their investment returns. And his returns are unreal. 10. All the rest, he says, are mediocre at best. That's Warren Buffett. That was like, wow, what an epiphany that is. He is a big time loser, right? I mean, he doesn't get it right even half the time. Nobody does. Because you just have to be culling those out over time and letting the Apples, Googles, the big guys, the Procter and Gamble's as they piled up growing dividends over the years. The income story that is. Johnson & Johnson, amazing income story. They take time, but it works. All right, Jen, I could keep going, but I'm not. Let's take some questions, huh?
Well, so far I've been watching and there we go. We have one now. Hang on one second. Easy question. Will our portfolios remain unchanged? That is, does Schwab offer the same investments, same stocks as TD, and our funds will remain as they are? Same accounts on 9.5 as they are 9.1. Yes, they will.
Absolutely. Not a change. In fact, one of the things that we really pushed for, because we've had some special concessions when we decided to join TD Ameritrade, was to get some of the lowest cost mutual funds available. Okay, meaning all the costs are stripped out. You know, the dirty little secret in our industry is that TD, Schwab, and the broker dealers out there, Edward Jones, Merrill Lynch, all those guys, they take a piece. You know who that comes from? Right, you. They take a piece of all that action, and that's the back office thing. And it's not really a dirty little secret. It's how things are done. But the point is, we didn't want that. We wanted the cleanest shares we could get, and they agreed at Schwab to honor what TD did. So literally everything's coming over the same.
And I just wanted to re-explain too, the investment decisions are made here locally. They're not made by TD or Schwab. They just custody your funds. So please understand that's why they don't make any of the decisions at all. Dave, could you take a second and explain why we're using the money market instead of holding cash? I wonder if people have noticed their cash positions are quite lower than they used to be because of the money market.
Yeah, that's a really good point. Because the money market is earning over 5%. That is why. So we keep little in cash and we sweep out pretty consistently. But as you know, we have no problem holding some cash if we're earning a little bit on it and looking for a market correction. That's not a prediction of how deep the correction will be. But if we get an opportunity to buy a company like Prologis at 10% less, we would like to have some cash to do that. That's an opportunity for us, especially for like income type investors, growth of income, and those types of things that we're looking to buy on a dip. And that's where some of that cash comes from, number one. Number two, if you are on income, and many of you are, I can see by the names, many of you are drawing income. The way we see income is we want to know that there's 3 to 5 years worth of income coming into the portfolio or sitting in the portfolio in investments that don't move around much, if at all, and money markets don't move around at all. Then I want 3 to 5 years in there. Why? Because when the market has a correction and we know it's coming, I've got 3 to 5 years to wait it out. The only way a person runs out of money is by selling down, okay? Or of course, if you have such an aggressive draw rate, of course you're going to run out. But we've more than communicated that to you. So we are thinking 5 years ahead on these chunks of money. And so that's why we want to have some part there or in bond funds, things like that. We don't expect growth on those. We want income, and we want to know we've got 3 to 5 years of income needs taken care of. Right now, we're actually 5 years plus on that. It's not a market statement. It's I can get 5%, and we haven't had a lot of corrections to put more to work.
And yes, the Blue Leaf tool, just again to re-explain, that will continue working, and the data, the history will all come over. So it should be as smooth as can be, but again, give it a little time, just because I'm not sure how quickly they'll be able to update everything, because they're going to wait for the feed from Schwab to Blue Leaf, because Blue Leaf is what we call an aggregator. So they'll pull information from all the different funds and put it in one spot. So if Schwab isn't able to immediately send that feed to Blue Leaf, there might be a slight delay, but I highly doubt it'll be very long at all. Okay. Any other questions? Great. Hey, Dave, I did want to mention, because I know it's funny, we're getting into fall here. The end of the year is going to be here before we know it. So don't forget qualified donations if you haven't taken your required distribution, or if you would like to give to your church or some charities and you have highly appreciated stock, before you write a check, call and talk to us. There may be better ways for you to do it tax-wise.
Absolutely. Absolutely. And by the way, your accountant typically is not proactive on that. So don't think, oh, I don't have to worry about it because my accountant would have told me. No, probably they didn't. Probably they don't. We find people find out from us, other advisors, they do not learn from their accountants. That's not all accountants, but that is most certainly the majority. Okay.
All right. I don't see any other questions.
Well, then everybody have a wonderful day and a wonderful transition. We're feel very good about this. I'm quite positive things are going to go well over the weekend, and it will probably be busy next week. If something does happen to go wrong for you, and you just can't see something, give us a try. If we're busy, we'll, just keep trying. Okay. It might be a pretty busy Tuesday, because a 1% error rate times enough people is a lot of people. So I think that we'll have even less than 1% error rate, but it might be a little bit busy. But I want to assure you, the money's there. It's not gone. Okay. All right. Have a great rest of the day.